Hi, and a warm welcome to everybody to this event. Where we have the pleasure to present a rematch. In today's presentation, we are joined by the company by CEO Nikolaj Magne Larsen and Deputy Chairman Laurits Bak. Today's event will cover the Q3 report, but of course with extra focus on the results, but also the progress in the growth plans for the facilities, and least but not maybe what you are a very challenging energy situation that is pressing your results. But in the box down below, you can ask question through the presentation. I think we will run the presentation and then we will take the questions in the end. And some questions have come in on forehand, and we will also take those. But for now, I think I will turn the call over to you, Nikolaj.
Thank you very much, Michael. First of all, thank you everyone for joining and watching this. This is the Q3 results, which we just sent out yesterday. First page, you see an updated view of our new factory in Holland. But overall, if we look at what happened in last quarter, we announced a while back a temporary shutdown, or partial shutdown, I should say, of the operations in Herning, which is driven, as Michael correctly said, by the energy prices that we've seen. We are utilizing the situation to maintain the equipment and also focus on operations that we could run without gas, while still creating value out of our products. But from a revenue perspective, it will hit us in the sense that IFRS revenue is linked to production volumes for a recycling company. So if we don't run the turf that we normally run, the revenue will go down. It doesn't mean we don't have revenue, because we still invoice our customers, we still get materials in, but just for you to be aware that that will impact the IFRS performance. If you look at the numbers, you'll see quite good progress in all the three major regions we have in terms of front-end revenue. We are up year on year, and we have also collected enough turf now that we can run the factory in the Netherlands, that we will see a bit later, for the first 12 months. So that's also very important for us. And if you look at the what we call the adjusted revenue, i.e. the invoiced revenue, we are up in total up by almost 10%. The back-end volume, we have seen some challenges, especially on the transport cost. You can also see in our revenue that the transport costs are higher, both from a revenue and a cost perspective, and that has impacted some of our ability to ship the materials further distances. From a more strategic perspective, one of the probably the major milestone for the year that we set out 5 quarters ago was to build a factory in Tiel. We had I think a lot of doubters saying that we couldn't build the factory. Maybe we could build it, but not on time, and probably cost a lot more money. So I'll give you an update where we are on that. But in short, we are very, very close to operating it, which is, in my view, a fantastic performance by the team in these challenging times with bottlenecks in almost every product that you want to buy these days. So we'll see that. And of course, once that run, I come back to the IFRS revenue, we will then see a increase in revenue, because then on the IFRS side, the Dutch factory for the first time will start to deliver revenue. Also, we have this year also a major focus on developing our backend products, and basically making it focusing more on the vertical integration, i.e. not only selling the products as they are, but actually expanding them and getting more value out of our products. And we have had a lot of progress on that, especially on the fibers. That's driven by a cleaner output on the factory in Herning, which we expect to mirror or make better in Holland. And of course, also the energy situation has also made that some of these products are now more valuable than they were in the beginning of the year. And also the push, the mega trend towards using recycled products more and more. So we see good developments on the pricing and how we expand those products. And finally, we announced earlier this year also that we signed the contract to build the French facility. We wanted to start this process before the end of the year, and I hope to be able to announce something on this shortly. If we go back a bit into the numbers, Michael, it's I'll say it again, but it's the decrease we see in the IFRS revenue is mainly linked to lower production volumes in Herning. A bit technical, but this year we actually had a summer holiday because of the high energy prices, and last year we didn't. So we lost 2 weeks over this quarter, and that means lower production volume and hence lower revenue. We've been through the back-end products, the decline there, and that's mainly due to the transport cost, which has also gone up. And again, good performance on the adjusted revenue, which is the real intake that we have, up by about 15%. I think that's almost everything there is to say about the revenue numbers. In terms of the gross profit, unfortunately, we have a negative gross profit in Q3 this year. That's mainly to do with the energy cost again, which if we didn't have it, would have been positive. So that is the big difference if we compare to last year. On an EBITDA level, we are minus 50 million versus 31 last year. And that is something we also anticipate in the IPO, because this year will be the most expensive year. Again, because we will have all the cost for building the Dutch factory, for all the people and everything else, but we don't have any revenue. So that is, of course, the main reason. We've also, as we announced already, started in the US with a lease on a property. We're looking have the permits that we sought for, etc. So also there we don't have revenues but only costs. So those are the two major items that actually contribute to this negativity in EBITDA. Of course, we have also seen, which we also announced, the energy prices going up in Denmark, and that is hitting it as well. But those are the main three reasons for the decline. I want to go to a bit more detail about the partial shutdown of the factory in Herning. It is, of course, due to the gas and electricity prices. They go up and down, so we're trying to figure out how we stabilize this. We use both gas and electricity in production, and what we do is we've ordered LPG gas. That is a much more stable source, at least historically, much more stable source of energy. So we've ordered that so we can not be under the influence or as much influence on the gas prices in the market. So that's the major thing we've done, and that means we will be able to start up again. Apart from that,
Nikolaj, if I can just, there was a question here. The LPG, I guess you call it more stable, but trend-wise, I guess it will follow the gas prices up. So can you explain a little bit about why you put this in as something that might mitigate some of the big volatility and the price increases on energy?
Yeah, it doesn't follow the natural gas price, contrary to what most people think. It follows more the oil price, and it's funny to say that that's more stable, because normally you would say it's not stable, but it's a byproduct when you produce oil. So that's why it comes out in those costs. So it doesn't actually follow the price of natural gas that we used to get delivered, at least from Russia, and therefore we delink it completely. The other good thing about is that we're going to install a device which is flexible, so we can switch between natural gas and LPG when one is cheaper and the other is cheaper. So historically, and the reason why nobody used LPG is because historically it was more expensive than natural gas. Since the crisis and the war in Ukraine, of course, it's been a fraction of the cost of natural gas. Over time, however, we do expect that natural gas will be cheaper again than LPG. Once the world normalizes, if it does that, then it will be cheaper again, and then we can switch back to it. So it's not like we're uninstalling the natural gas. We just have a burner that can burn on both things.
Okay, perfect.
And then, of course, what we also implemented after the summer holiday, or during the summer holidays and after, was really price increases on our products. We are hit by the fact that many of the front-end income we have been offers that have been out for maybe 6 months, so we can't increase them as quick as we like. But the back-end products we have increased to cover this. And of course, in the future, we will now in the new season go out with adjusted prices on everything so that we can get the price that we should have because of the more expensive production, like I would say all production companies in Denmark have experienced. In terms of the factory in Tiel, I will show you a small video in a second, but that has been financed in the last few quarters by mainly 2 things. One is a grant from the Dutch government, and they give grants to new technologies that are superior than anything else they see in the market. So very, very pleased to get that, first of all, from a money perspective, and secondly, from the rationale behind it. And then we have also closed the financing, debt financing from the local government and the local green growth fund. And as I said before, we have had many issues in securing the material, but we have been able to overcome them all, and we're very pleased that we've been able to do that. So very, very happy where we are. I want to show you a small video of how it looks down there because we're actually quite proud of it. So I'm just going to share my screen here, and hopefully you will be able to see it in a second. And I know it's on my screen, but still have a look and follow if you can. Basically, what you see now is a time-lapse video from when the ground was just a plain field. First of all, the building, of course, the first thing we have to erect. And here you can see that we have quite a lot of things going on. We actually completed the building, which I think is also quite unique, 3 months ahead of time of schedule. Probably also a bit of lucky we did that, but I think that's very important. That made us also able to move some of the equipment inside before time. Now you can see we're almost ready. On the left-hand side, you have where the products come out when the trucks are coming in. On the right-hand side, you have the office. And then we move inside the building. Inside the building, you see the tower we are building here. It took 3 months, and you can see the machines we're putting on one by one. And just as a fun fact here, just the tower itself, there you have 269 tons of steel. You have 4 floors. There's about 20 meters from the top floor down. So if you ever come and visit it, I would just make sure you're not afraid of heights. But I was up there the other day, and it's extremely impressive. You see all the machines that are being installed here, and remember, this is a fully automated system. So at the far end of the factory, you can see a hole in the wall. That's where the material comes in. It's put on outside on a conveyor belt. And the next thing we have to move is under this tower. There will be big bags once it's installed, and that's where everything comes out. So that's really where we are. And I think that's very happy to say that we are. The last big thing has just arrived last week. So we're just installing the last few things and commissioning shortly. So that's the update on Holland. I will move on a bit to the back-end value that I touched upon a bit before. We have focused on 2022 to develop more value out of the back-end products. That's clear. What have we done? How we've done this? We go into other industries where the demand might be higher for recycled products, or where they have a quality that we can meet because we have quite high quality and hence a good value for it. But it does mean that we need to have a consistent quality and volume. And of course, we expect to have even better volume. We'll get much higher volume in Tiel, but also more consistent products. So that's also the reason for going into this market where we get more money for our products and then open the door, so to speak, when the Dutch factory is operational. And and on the fiber side, I said we've done a lot of things there, and we hope to announce a couple of things shortly on that will increase the value significantly, as we also put in the Q3 report. Substantially, I think, was the word we put in there on the back-end value.
And just to touch a little bit upon it, I know you talked also about that in the IPO process. This is refinement of all your outputs so that it's like you can use it in the virgin material production and such stuff. So is that what you are doing? And you're talking about agreements. Why is that so important for the price? Is that if you can deliver something consistently in a long time period, you're able to get much better prices than, for example, on the spot market where the quality might swing? Is that how we should understand this, the announcements you are making in this quarter here, or where am I wrong?
Yeah, that's a good question, Michael. I think one by one, you can see, I mean, on the sand, for instance, it's quite difficult to develop the product much more because it's sand, right? But what you can do is you can have the volume and the consistent quality. That's the important bit. And then you can talk to the big actors. Or you can send it out to the turf pitches again, like we've done traditionally. If you look at the picture here, you see the fibers on the back-end value slide. And those are the ones we've been focusing a lot. The fibers here, I always said, I believe I said in most meetings on the IPO also that I believe there was a significant upside in there. And I can just see now that we're going to beat those things that we expected to in the IPO in terms of pricing on this. And that's because the fluff we have on this side, we call it fluff, the green face fibers that come out. Once we make them into a better product, that means it could be into pellets, which is almost like small plastic balls, or other products, and sell them on. Of course, we get a much higher value for that. You also have a cost of getting there, but what we can see is that the profit in that segment with our material is much, much higher than it is just selling it as we have on the slide. And that's what we're developing.
Yeah, and you talk about agreement. Is that why you get a higher price, because you can make longer term agreements and commitments to a certain quality that they don't need to test every sample they get in from someone like you, someone else, or why is this value creation coming?
There's two reasons mainly that we see from the people we're talking to, and that's quite a few. But what we see there is, first of all, the secure supply. I mean, where they secure it today, the supply chains are fragile. Many of them have gotten, recycled material from China. What does that mean? There's no traceability on it. They don't really know what they're getting. If you get it from us, you know exactly what we're getting. We have batch production. We can tell exactly where the pitch is coming from if they want to. But it basically means close to the customer. So actually our customers in Europe have been buying it before outside Europe. Transport cost is an issue, supply chain. And then thirdly, because our product is very clean, they can put more recycled product of our product in than what they're using. So they could go from, say, 40 to 80% of recycled material, or 40 to 60, or whatever they have in their process. That's a huge benefit for them when they have to sell it on. And with the new legislation and all the trends coming in, you have to have more and more recycled plastics in your products going forward. And therefore, all the production companies are already now looking into, where do I get this? And with the new legislation, the waste regulation coming into effect in 2025, there's going to be, I think, a scramble to get hold of this material, because I don't believe there's enough recycled plastics out there for the production companies in the future. So I think the price is just going to go one way on this one.
So the expectations on somehow mitigating some of the energy cost, or a lot of them, by this higher prices you can get, is not only hinged on that. If energy goes up, the heavy energy materials will also go up in price. It is more that you have a quality that is what is hinged on, not just that there should be a natural hedge.
If we looked at the fiber, in the IPO, we were selling the fibers probably at a 15th of virgin prices, a 15th. And now we just see that gap is closing in. And I think over time, in many industries, in the packaging industry, you see the recycled plastics are worth more than the virgin. I'm not saying that we can do that, but I'm just saying that there's a trend. And I think with the demand for the recycled plastic in the future, I don't know where it's going to end, but it's definitely going to go up.
And right now you are selling it as not virgin or not recycled material. Should I read that you still haven't made those contracts? You are still selling it at some with a lower price than you should expect from your quality.
Yes. Yes,
when
we
I
do
look
that
at your
right now.
current numbers?
Yes, we are, with the few orders or the few agreements I have on my plate right now, I think we will sign them very soon, and then that price will dramatically change.
Perfect.
Yeah, maybe just mention, if anybody's interested to study more, there's go read on the new waste directive that's coming out, and the potential demands that are coming, that what percent of plastic in Europe needs to come from recycled plastic. So if you're interested, go search for the new waste directive for EU. Here you can see what the legal side that is coming, and then make your own assessment what that would mean on companies that are able to produce high volume recycled plastics.
And finally, Michael, just a bit about the outlook. I think I said some of this already, so I won't bore you too much. The Dutch plant is opening. I think you got that. You saw that. Agreements on the back end we talked about. One thing we didn't discuss, which has been a big issue this year, which we also addressed last time, was the expectations to have a rubber ban. The EU, I think, is meeting on the 13th of December to discuss or vote, on the matter. We expect there will be a rubber ban, either or. I don't think it's a bad thing for us. If it's status quo, we have the business as we do. If it's not, I said that before as well, we'll see some of our competitors will struggle with the rubber they get up, because they don't have a place where they can sell it to, whereas we do. So I think that is all overall positive. We are expecting a ban. And if it comes through, we expect the countries in the EU to quite rapidly move away from rubber. We also expect in 2023 to raise more capital. This year we raised it through grants and debt, and we expect to continue raising capital in 2023. Apart from that, we talked about the prices on the front end and the back end that we expect to increase as part of the energy crisis. We talked about the French joint venture already. We expect to announce something soon. And one of the final points is actually we're quite confident that the factory is going to be ready before Christmas. So we're going to have an investor tour to Teal, for those interested, on the 19th of December. To see the factory at first hand, simply because it's a beast, and it's actually we call it the beast, and it's quite impressive. So we're inviting people to come and see it. In terms of how the operations we expect them to be in the Dutch factory, I just want to make a few words here. We will ramp up slowly during the first quarter, increase the speed in second quarter, and hopefully in Q3 we'll be at full speed. And once we're at full speed, we also expect to have positive gross margins in the factory in Holland. So that will, of course, be a very, very significant point for us. Just to mention here is that, just remember, the output of the Dutch factory is more than 2 times Herning, and many of the costs are fixed. So, for instance, the rent, even the energy level, they will be a bit higher, but they won't be twice as high. The consumption will have the manpower, which is 10 to 20% higher in Teal than in Denmark. So there's a lot of operational gearing in the business that we will now reap the benefits of by opening the Dutch factory. So we are very confident about, so to speak, the future of that business down there. And I think that's all I had on the presentation. Laurits, I don't know if you have anything to add that I haven't mentioned.
Maybe just one point that if people recall, going back to the whole IPO plan, the Teal factory is the blueprint factory, which means that the next factories that are coming out are going to be completely identical. This is the conceptual factory, so it'll be no different than the ones that eventually will end up in California and in Pennsylvania and across the globe as we expand. So that's why it's quite important that we're able to stick to the timelines, and we didn't get any surprises, because that is a key factor in us actually rolling out on the next cycle of factory expansions.
Yes, but should we jump to the questions? You have touched a little bit upon it, but let's dig a little bit more into it. how many factories do you expect to be able to establish, including Thiel, without getting any new money from the market? And I do understand that it can be hard to say with whether you get grants, whether you want to do it as a joint venture. But can you elaborate a little bit on what you have on your balance sheet, be able to do, and of course with all the uncertainties, whether something other can change that you don't need that much cash?
Now, should I answer?
Please.
Yeah. So there's some assumptions, as you say here, Michael. You're absolutely right. We have been able to raise debt and grants to finance the Dutch factory fully. And of course, if we can continue to do that in other countries, then the sky's the limit. I don't expect we can do that everywhere. I think we got a very good deal in Holland. But for instance, the French factory, hopefully, as I said, we'll announce very shortly. But we wanted to raise for the building and the purchase of the land and the machine, all the capital required for that should be completed relatively soon. So that's also one. And I think it really depends then on the rest. It depends on obviously the cost for the factories, because they will go up with the inflation as well, and what we can get in grants and debt. If we need, then in addition, of course, there's always the possibility to go out and raise equity on the markets if we want to do that and go bigger. But for now, I don't know exactly what else we need at this stage. I don't know if you have anything to add, Laurits.
No, again, as I think going back, if you look at the IPO, you can see the full range of capital raising opportunities for the company. And of course, all these things have been taken into consideration as the Dutch factory is now coming live to find out what is actually the right foundation to attract the capital for the next phase. But as we've seen here with the Dutch factory, the ability to fully finance that was not something that we expected coming out of the IPO. So that was very positive how the Dutch government have supported the establishment of the Dutch factory. So hopefully this is something that can continue also to replicate, because of course that is attractive for the investors in the company.
And a little bit joining on the possibility for joint ventures. I know you have talked a little bit about your plans. I do understand some of the first factories you need to show that you can do it, the results, and that you can replicate it once at least, maybe one more time. But from that on, are you more thinking about joint ventures in a market, where of course financing has become a little bit more difficult and maybe a little bit more expensive?
Yeah. Again, I think we're reaching a point now which is extremely important, Michael, because once we prove that we built a factory on time and they can operate, it opens up some doors for us, especially on the joint ventures. I mean, if I would put myself in the shoes of a joint venture partner, I would say one thing is to understand the market. I know there's a big market out there. You can sell your products, all this. Let's look at America, for instance. I know there's huge market and huge potential for the products, but does the machine actually work? And can you build one? So I think we're turning the corner in the next few months on that to open the door for many joint venture possibilities. And of course, we need to sort those out and figure out which ones we want to go with. We are being approached on this on a continuous basis. And I think it's a very relevant way for us to expand quick is joint ventures. So of course, now we have the joint venture in France for 2 years, and that gives us some confidence. What should we do and what shouldn't we do? But so I think, especially in light of the turmoil in the financial markets, joint venture partners is a very attractive option in my view.
This question here: do you plan to publish revenue and earnings expectations for 2023 for covering the whole company, including the Holland when it gets operational? Can you give a little bit of detail on how you are thinking about guiding?
Yeah. No decision has been made on that yet. I think that's something we'll do around the annual accounts. But what we can say is that in our business, our revenue is linked to production volume. So I said that earlier in the call. And that means that we will get a significant upside on the revenue side in Holland this year, because we had no IFRS revenue this year. Next year, we will have the machine operational. So we already know we're going to have much more revenue on the front end in Holland next year than this year. But in terms of specific guidance, I think it's too early to say, Michael.
Perfect. And then there's a question here: why does back end revenue fall more than the front end? You know, I could understand a little bit about prices, but you volume wise, have you not sold all of your materials that you have recycled? Is that a reason? Just to understand why those two are not closely following each other.
Yeah. Why are they not closely following each other? I think it's really down to what you get out of the machine. You know, even though we might, let's say we produce 10,000 tons in a given period, those 10,000 tons could be sand-filled pitches, it could be rubber pitches. If it is, for instance, so many of them are sand-filled pitches, the sand has less value than the rubber. So when we sell it, the value of a sand pitch will be quite a bit lower than a rubber pitch. It could also be more or less empty pitch, and that will of course run quicker through the system, but it will still not have the same value on the back end. So it really depends. We always look at, when we price our front end, we look at what we get out of the back end, and hence the reason here in this quarter we then been producing materials that is less worth in the back end. So that's why. That's why.
Okay, perfect. And then there's a question here: how are the energy prices in Holland? Are they higher or lower than in Denmark? You know, there is a wide range of outcomes in Europe. France is cheap and so on. So how is that?
France is not cheap.
France.
I know that wasn't your question, but France actually has some of the highest energy prices now, because of all the nuclear has gone into a maintenance mode. But they used to have, Michael, so you're absolutely right. They used to have the lowest, and they used to export electricity. I've become an expert on electricity and gas for whatever reason that I wasn't 12 months ago. So the gas prices that we pay is actually listed on a Dutch exchange. So the gas prices is more or less 100% the same in Denmark and Holland. There is a bit of what do you call it, transmission costs that are different, and taxes different. Electricity is a bit lower in Holland, so that's good news. But it is a segment where we see a lot of developments all the time. New players coming into the market, you know, caps on how much you can use of electricity and gas and all those things. So we monitor the situation ongoing. We actually have a service now both in Denmark and Holland where we get weekly updates on where we are, and we follow the prices. That's what you have to do these days. But so not a lot of difference between Denmark and Holland overall. France electricity is expensive, but we're not, you know, there's going to be a while before we operate there. So let's hope that something has been solved in between.
And then there's a question here: should we expect to see positive gross margins in 23 with the Dutch production up on full speed? I think you touched upon it at one of your last points, and maybe we could highlight it a little bit more. You know, I do understand that even if you don't get more for your material, your back-end material, would it still be possible to do that with the current energy prices?
In Holland, we still, with the current energy prices, no difference. We will make a very, very solid business. What we need to do is get it completely up and running for a full year so you can see the effect. And we have to think about next year how we can show it to the investors, the effect of the Dutch factory, so it's not just put into a big group and you can't see it. So that's something we have to think about for the annual accounts. But the gross profit in Holland will be definitely, once it's up and running, it depends on when it is, it would definitely in that period of time be positive. And it could be for the whole year, but I don't know yet. It depends on how quickly we run in the beginning.
Okay. But gross margin wise, the Dutch factory is big enough with those current energy prices to be gross margin profitable.
For a full year of operations, we would be positive on EBITDA, not gross profit, but all the way to EBITDA.
Okay, all the way to EBITDA.
Even with the current energy prices, it's still very profitable.
And maybe just elaborate what Nikolaj is saying. We're looking to see what we can do to do maybe carve-outs to demonstrate this because we're going to start up with a full operationalization of the factory. Is there an ability to show this in a more segmented approach so we can demonstrate this already next year for investors?
Yeah, I guess that could be interesting because I guess if you start building up the French factory, we will again have a year where we dilute the value of the information because that will go in and of course make the EBITDA perfect.
That's also what we said in the IPO, that once you ramp up all these factories after each other, you should have the legacy of operating everyone or opening everyone, which will muddy the waters a bit. And that's exactly the same you're saying, Michael.
Perfect. And then a final question. Could you give a little bit of information on the rubber ban? You have done that and how it will affect the future for new turf fields or maybe your business. You have touched a little bit upon it. I think you were very fast to touch upon it and say it might be a competitive advantage for you because, but also touch a little bit upon it, why you do not fear that as much and it might eliminate some of your competitors, as you mentioned.
Yeah. Fair enough. It's because we talked about it before, so I didn't want to bore people, but let me just go a bit more into detail. Yes, of course, on the installation of new pitches, if there's a ban, we expect the ban to mean that you're going to have to phase out rubber over a 6 to 8 year period. However, in real life, we don't expect people to install a new pitch with rubber in if the ban comes into force, because then you have to remove it after 6 or 8 years. So it doesn't make any sense. So the new ones will have alternative infill, or what we see more and more, less infill. So just sand, but much more fiber. And so we will then have a period of time until they come out, and that will probably be between 8 and 10 years to adapt to that situation. But I can already say now that we see there are, of course, already fields out there which are similar. They're just not as good, but they are similar, and I don't think they're going to invent a new product in next month. So, but that product will basically have more fibers in. And if you look at what we just said about before, where we're going to see the big value increase in our backend, it's on the fibers. So for that reason, the fact that we can get it so clean, nobody else can, and we can sell into the markets that we can, we're going to have a huge competitive advantage if it's just more fibers they put in and less rubber, for instance. That's just one. The other one is that some of the competitors we have are on-site separators, what we call on-site separation. So they roll it up and they beat it on the back, the carpet, and they run through a very simple process. And most of it is then lifted back into the new pitch. But if there's rubber in the old one, and you cannot use rubber in the new pitch, you can no longer just lift it into the new pitch. That means that their competitive advantage is they have no transport cost. They now have to transport it to a site to burn it. So they have transport and disposal cost. And that means their service becomes much more expensive, and we have basically the same as before. And then you can say the bigger ones that are using water or other ways to clean this, they have an issue with the rubber today because it's wet and it's not 100% clean. It's probably 15 to 20% sand in there. So they cannot sell into the industry what we are just doing. And by selling it into the industry, we don't have to sell it back into the turf industry. And that's what everybody else is doing. But if you're not allowed to sell into the turf industry because they're not allowed to use it, what are they going to do with it? So I think maybe they can give it away for free, but I think, honestly, I think they're going to have to burn it. Or sell it to a continent where it's allowed, Africa or somewhere else. But of course, the profits are going to be much less, or even with a loss, whereas we can still sell it into the industry. So for that reason, I think the rubber ban is positive for us. And so we're hoping it comes through. I think for the industry as such, they are still finding their feet on what should be the next thing instead of rubber, because it is the best product that's out there for the turf pitches today.
Perfect. I think we have went through all the questions. So thank you both to you, Nikolaj and Laurits, for taking us through the presentation, answering the question, of course, for the audience listening in and asking all the questions. May everybody have a nice day.